Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Another day, another period of agonizing prognostication. Not much has changed since the last video. We're just mainly ranging sideways. If you're on high leverage based on low time frame signals, I will pray for you because in my opinion, it's very difficult to predict anything low time frame right now. Mainly because any time you get a low period of volume, anything's possible. Everything goes out the window, and it's anybody's game. You have stops being run every so often. You know, it seems pretty obvious to me anyway, and a few other people, that pretty much just noise on low time frames. So let's talk about high time frames. We'll stick to daily, weekly sort of thing. Everybody and their mother and their father are pretty much watching this triangle, which is a good reason why you should be watching it as well. Even if you hate triangles, if you think they're crap, if you think they never work, whatever, I can tell you right now, Juice, that a lot of people are watching this, so it's just worth taking a look. And depending on how you measure this, you know, if you use this wick or this wick, whatever, in general, we're within the time window of breaking out of the consolidation. You can see we've had months and months. You can see we've had months and months of consolidation. Volume has gone to almost nothing on the daily. And the triangle's gotten tighter. We're getting higher lows, lower highs. That's what happens when you consolidate. And I'll talk about this in another chart later on. In general, the expectation is the targets, high or low, will break the range of the consolidation. So if we break up, we're headed for this zone. If we break down, we're headed below this zone, you know, below this wick at the very least. It won't reach it immediately, most likely. You know, you'll see a jump in volume. It'll break the local highs in volume, and then you'll start to see the domino effect if it breaks down or up in this rare case. So I'm leaning bearish, mainly because of the daily cloud. I look at a lot of things, but at the end of the day, for me, the daily cloud and chart patterns have worked the most as far as actionability and signals that are real on 2x cloud. So you can see here, prices below cloud, TK is bearish. I mean, this is a bear picture. It's been bear since it broke down from the cloud. There were reasons to be hopeful as far as chart patterns, and all those have failed. You know, we had the inverted head and shoulders, we had the potential Adam Eve, we had a potential edge-to-edge trade. So it's back to being bear again. There's no problem with that. It is what it is. And another reason to expect lows all the way down here would be the yearly pivot support, basically at 3,000. Nice even number, nice zone prior where things consolidated before breaking out to the October plus all-time highs. So that's what I'd look at if I was looking at anything. Let's look at weekly cloud, and as you can see, we're in basically no man's land. Anytime it's above cloud but below key June, or below cloud and above key June, it's a very mixed bag. Things remain bullish on balance because it's above the cloud, but overall it's definitely neutral as far as directionality is concerned. You can see very clearly we've bounced heavily every time until you don't. You know, the trend is your friend until the end. So this remains loosely bullish. Now, if we get a TK recross above cloud, you know, if we just go up from here, then I'm bull like no tomorrow, okay? But until then, it's tough to stay super bullish. The other thing you're seeing is the beginning of a bearish cloud here. So it's looking grim from that perspective as far as bullish continuation. Another thing you're seeing here is lagging span going to price for the first time since breaking up, really. So all this is fine. All this could just be reaccumulation, or it could be distribution if you're a Wyckoff person. And again, the volume quite obviously going way down to levels not seen, you know, since pre-17 almost. So that's really interesting. And if there's any exchange where you can trust the volume, it's Bitfinex. I trust their volume over anybody else just because the fees are so high for trading. So it's pretty hard to Yes, you can fake volume. Yes, you can wash and spoof and whatever. But in general, it's more difficult here than it is on a fee-free exchange, for instance. And some people are looking at the weekly single settings or default settings, whatever you do. I don't care. I'm not going to argue with you about that. But again, you can see very clearly we bounced every single time on the Kijun, and then we didn't. Okay, the cloud very clearly telling you to get out at 12, 11K, something like that, with this bullish TK cross, bearish TK cross, sorry, for the first time since breaking out of the cloud. So if you're long from 2015, this was your exit signal per cloud, traditional rules. We are seeing price deviate extremely far from the mean, which is this red line, the Kijun. Okay, if we were way down here with the Kijun hugging price, I would be much more bearish than I am now as far as weekly signals are concerned. Another thing, when the cloud is thin, that also speaks to just the indecisiveness and lack of trend. Consolidation, another way of putting that. So there's nothing going on trend-wise. It's a lot harder to look at cloud seriously when that's happening. Cloud is a trend-based indicator, so when there's no trend, it's just going to be flat for the most part. And like I said, yeah, it's leaning bearish, but it's not mega bear like it could be. Here's a pitchfork. The anchor is on the 2013 all-time high. Kind of interesting that it lines up like this. Maybe it's pareidolia. Maybe it's coincidence. I don't know. I don't care. I'm going to play it till it isn't. Basically what this is saying is buy here, sell here. This is a high probability target. The moment we break down from this pitchfork, as always, it's invalidated. Until we do, it's game on, okay? So the expectation is that we return to the mean, like we did here. And there's always a potential of breaking the mean. If you break the mean, the expectation is you move higher to the upper zones, pitchfork people. So historically, this has been a buy. Now, the maximum risk is also in this zone because if we drop out, obviously the trade is donezo, it's over. But there's also maximum reward. So the R&R here gets a little fuzzy depending on the way you look at this. Either you can say this has been a bounce point twice already, arguably 3 times. It's a good buy. Or you can say we're pretty close to falling out. I'm going to wait till we get above what X level, whatever that is. And it's also interesting that this kind of fits the triangle narrative as well. I really like this 2-day 5200 because it just shows this compression, this tightening. We're on like the rack, this medieval torture device, right? Where they like tighten the screws on your limbs. And every day that's happening, we're getting a little tighter, and then eventually we're just going to break. Or a less gruesome perspective would be a jack in the box where we're just coiling this down tighter and tighter and tighter. You just keep turning the lever each day. Eventually this is going to break. Eventually you're going to see volume. I keep talking about volume just because it's so striking and apparent what's going on here. And that's a definite sign that we're out of consolidation when we start breaking up on volume. But if we get a bearish cross here, I'm not optimistic we're going to go higher. If you look at ETH BTC, a very similar picture happened where we got this tight coiling on a high time frame of the 5200, and it broke down and the cross followed and it went way, way down further. So something to look for. It's got a lot of time. This is a 2-day chart. This has got maybe 2 more weeks on it, if anything. And this just echoes the triangle again. And if anything echoes a triangle, it's B-bands. So B-bands and triangular coiling consolidation are very intimately related. B-bands will tighten just as much, as anything would when there's no volatility in a triangle, for instance. So let's zoom way out. This is the weekly. For you OGs who recognize what these colors are, this is the Bollinger Band Width Indicator. I will post the PineScript version in the comments or the description of the video. That way you can port it into TradingView because it's not there anymore. So what are B-bands? They show volatility. They expand when volatility is high. They tighten when volatility is low. They're not so great at telling you the directionality of things when bands are tight. They are very good at telling you when to expect the move. So you can see historically, we're actually pretty low on the weekly bands, as in they're getting tight. They're not, crazy tight, but historically they're pretty tight. For the most part, you can write off this zone, at least I will, mainly because it was very clearly Wyckoffean accumulation, okay? This was meant to be, this is hindsight at this point, obviously, but this was meant to be a period of sideways just based on structure. I know that's like, there's not a lot of evidence for that at the time, just as there might not be a lot of evidence for accumulation here at the time. It's hindsight, but we're just going to say we're never going to get this tight again this soon. Okay, let's just assume that. Another thing you can sort of write off is this, at least I will, that it's not an ascending triangle. It's an equilateral triangle, and all of this was post-Bitfinex kind of interesting recovery and then all-time highs. So if anything, this zone and this zone were more real as far as B-band consolidation just by itself in a vacuum. Most of these other places had impetuses behind them other than, I don't know, consolidation. I feel like I'm talking in circles, but the point is, we're clearly bearish. We've been bearish here for a long time. It's definitely a different picture than being above. The middle here is the 20 MA. Definitely a different picture than it was its entirety since breaking up. Again, I want to be bullish just like everybody else, but if I'm looking at indicators alone, this is not a bullish picture. Now, it can certainly tighten, as I hope it will, over the next couple weeks. And then you get this thing where it goes from green to red or red to green. This goes lower, and eventually you get a breakout. It's really good when you get a breakout above or below the bands with a triangle in the picture, in the mix as well. Then it just adds to the confluence of where we're going. And as you can see here, like I said before, yearly pivot all the way down here. So 3K will be the target if we break down, whereas the upside targets are eventually probably much higher than these yearly pivots. If you put on the historical yearly pivots throughout all this consolidation, the R5 didn't even come close to 20K. So we'll see what happens. The expansion, where we're talking about like, is this a bubble, isn't this a bubble? You can see that we reached whatever this is, 2.4 on the B-band expansion. So as far as the next moves are concerned, these moves expansion-wise may have looked like a bubble in hindsight or a mini bubble or something, but these moves very clearly now in hindsight were sort of bubble-esque moves. So something to look forward to next time. We're seeing these massive pops where we're looking at the bark on the trees instead of the forest. If you're looking at the forest, you can see moves like this were just insane, right? All right, that's all I have for today. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.